How much do you think your mistakes are costing you? See, the thing is, whether you know how much or not, and you can quantify it or not, they're costing you. And it may not just be hundreds of thousands of dollars. Most likely it's millions. It doesn't matter if you're investing or you're not investing, you could still be losing money. And I don't know about you. I don't like losing necessary money. I want all my paper. If you're new to the channel, my name is James Strong. I make videos about trading and investing, right? We don't just trade for the sake of trading, and we don't invest just to invest. We trade to build and grow our capital, and we invest to build wealth. We don't trade or invest. We trade and invest. There's a lot of things that could be costing you money when it comes to investing your money, right? A lot of things. One of the main things a lot of people don't do, they don't invest early. Now, why don't they invest early? Number one reason, they might feel discouraged. They might not know where to start. They might feel lost. I'm gonna tell you something, man. Finance is dope. Finance is cool. This is not something to be scared about, to be intimidated about, to feel like, like I'm not here to try to sound smart, right? I went to school for accounting. I went to grad school for finance. I worked in finance. Like, I trade. I could try to sound smart. I could tell you what an RSI oscillator indicator is. I can tell you what moving averages are on trading. I can tell you about municipal bonds. I'm not here to do all that. We're gonna keep finance simple. We're gonna make it fun so we can get this financial freedom. That's all I'm here for, right? It's not complicated, but so many people think it's complicated. And I mean, for good reason. They make you think you have to have a financial advisor. You have to do these things. I'm not saying they're not wise. They may be, depending on who you are. But like anything in life, any sport you learn, any job you've had, anything you've done, you can learn it. And so once you learn it too, you learn how simple it is. There's truly no reason not to be investing, right? And another thing is, it's never too late. So if you're watching this video, you're 30 years old, you're 40. First off, 30 is still young. I'm not even 30 yet, almost. You know what I'm saying? Looking sexy, about to be 30, you feel me? But if you're 30, you 40, you 50, you 55, man, it's not too late, right? I'm talking to all the aunties out there. I'm talking to all the uncles. I'm talking to all the little cousins if you're a teenager. It's not too early or it's not too late. You want to be investing. This is the first thing that is costing people money, is actually not investing in the markets. And the thing is, literally, right? People lose on average. Let's do these numbers. If you start investing at 30 years old versus 50 years old, and you invest $500 a month into the S&P, right? The S&P gives back a yield of about 8%, give or take a year, right? So we're being modest. We're going to say 8%. That difference in waiting those 20 years to invest, again, age 30 versus age 50, you will lose $1.4 million worth of principal by waiting that long to invest. That is not even the rest of the points we're going to cover. That's the first point. So it is crucial that we begin to start investing. It is crucial we begin to start investing, okay? Another costly mistake a lot of people start to make is too, they want to time the market. Now, for all my traders, we don't time the market either, we react, but especially in long-term investing, we don't want to be trying to time the market, right? The market is the market. We can't control it. You don't know what is going to happen. Even in day trading, a lot of people like to say they know what's going to happen. You don't know. You have a hunch, right? You have a probability. You have a statistical edge by looking at data, looking at trends and patterns and behaviors in the market, but nobody knows what's going to happen, okay? So don't try to time the market, because a lot of times people may try to wait to buy in, things it's going to get cheaper, and it just keeps going up forever. Or vice versa. They may sell, things can go down forever, and then it recovers and they end up losing money. So that's a big common mistake, messing people up, man. Like, don't try to time the markets, because even by doing that, another thing is 42% of people on average are not investing in any type. I'm talking like, I don't care if it's a 401k, a Roth, your own brokerage account, trading, whatever it is. They're not investing in any form, dude. I don't care what you're doing, man. Before you get off this video, you need to get you a stock. I don't care if it's through Webull. I don't care if it's through Robinhood, right? I don't suggest that for long-term stocks right now, right? We'd rather have it in something like Fidelity, Charles Schwab, or Vanguard. But man, get you a piece of something. Buy you a fractional share for $10, right? Instead of going to the McDonald's, Chipotle, whatever you want to go, Starbucks, Take that $10, go ahead and get you a piece of equity and own something. You know what I'm saying? Start the day. There's no excuse, because now you can, at least you can say I'm an investor. You know what I'm saying? Matter of fact, I might try to link something. I don't even have a link, but I try to find one. Just throw it in there so y'all can be investing and get used to start investing to grow this wealth. Okay. The next point is, most people do not understand fees. Okay. They don't understand fees. They ignore all the management fees, and these are crucial. Now, I've found that this is a big one when I talk to people they don't understand. Okay. They hear things like, oh, it's only 1% per year. And you think like, okay, you know, what's $1,000 on $100,000, right? That's 1%. You want to apply compound interest to it. So this is what people don't really talk about. Okay. We're going to go back to that same $500 investment. Yeah. You want to do 1,000? No, we'll use 500, right? Let's use the same $500 investment. $500 invested over 40 years. One financial advisor or index fund, a mutual fund, ETF, whatever you have, right? Let's say the expense ratio is 1%. If you don't know what expense ratio is, we'll cover all these things and all the videos I'm about to start dropping. Again, I cover everything trading, everything investing, so you can be successful. I'm showing you what it is I do, the things I learn to help out my people, my family. You know what I'm saying? So we will cover that if you don't know. If not, Google it real quick. 1% invested versus a 3% expense ratio. $500 a month. Both of them are $500 a month over 40 years. The amount of money you lose in fees, literally, between those two, 1 versus 3, is $407,000 over 40 years. That's how important it is to understand fees. So when people are going to these places and they're choosing something that, oh, it's only 1%, 2%, 3% fee, you might want to think about, you know, how much that is you're really losing. And that's only investing 500. So if you're doing more than that or investing longer, you're going to lose more than that. Like, think about that, man. That's a big chunk of change. Now, we want to focus on not only the fee, but returns, but we don't want to only focus on the returns, okay? Look at the risk as well. How much do you have to risk in order to get that? So now this comes back to where if you're buying in or whether you're trading on both sides, you don't want to be over leveraging or over risking, right? Let's make sure it is I'm not going to say safe, right? But a stable investment. Yes, crypto seems sexy. Bitcoin seems sexy after you knew what happened. But did you get in at 60,000 when it dropped to 20,000? So are you willing to lose 2/3 of your money? Don't just think about the upside. Think about the potential downside as well. There's nothing scary about it. This is why we also diversify our portfolio. Some things are going to go up, some things are going to go down. Overall, we're going to make sure we're going at a consistent incline, okay? But we want to make sure we're investing nonetheless. We need to be investing, but don't focus only on returns, because you chase returns only, it's inevitably going to lose money because you're going to be blinded to reality. I mean, it's as simple as that. Now, the fifth one is not actually even on investing in particular, but it's not having a emergency fund or a savings account. This is crucial because when you're not investing, right? Or let me say this, you are investing once you get a little money. If you don't have an emergency fund or a savings account, you can't move freely because you're going to be moving with some panic or second guessing. Oh man, like if you need to pay bills with it, that's very irresponsible. It's the same thing I tell my traders, right? If y'all are traders and investors, you know I tell you this. Do not trade with money you need to pay bills. That's irresponsible. There's ways to invest and trade with very little money. Again, if you don't know my middle name is James. Get a deal strong. I'm going to get a deal. We're going to save money, right? I've started businesses that cost $85,000 for $5,000. I'm going to let that marinate like some chicken right now. You hear me? I'm going to let it marinate. I'm talking about tenderized and everything now. So you don't have to break your bank or break your wallet, man. Like, we are all mature. We got families, man. We are husbands. You know, for my ladies, y'all are wives, right? Mothers, fathers out here. Like, we got responsibilities, okay? So you don't have to break the bank, man. But we want to make sure too, before we even start investing, we have an emergency fund, we have a savings, we have a cushion. I recommend at least 3 months, but ideally 3 to 12. You can get 12, you're in a good spot. Now you can weather daggone near any storm. You know what I'm saying? And now all that extra money is just going on offense, man. You just attacking. Bow, bow, bow. You attacking. And now you can really get on offense and start taking those calculated risks now. Calculated, not just crazy risks. You can start trading, not worrying about losing that $100, $200, $300 trade because you don't need the money, right? You got out of debt. You don't have consumer debt. You don't have credit card bills hanging behind your head, so now you can move freely. You don't care if the Dow Jones or the NASDAQ goes down 10 points in a few months because it's doing a retracement or pullback, right? Because, yo, I got money to be cool. This is not money I need to spend on my bills. This is investing money. So, man, that's going to change everything for you because I'm telling you, you start selling and panicking, you're going to lose a lot of money. Ain't nothing worse than selling, when it's going down and then you see it go up 20 points. Trust me, I'd have been there too, early on. Hey, it sucks. It sucks, man. The next point is a lack of diversification. A lot of people want to find especially too, when they hear news like the GameStop stuff back in the day or Bitcoin or everybody is this investing genius when they know what happened, right? But everybody in a moment, there's another GameStop opportunity right now. There's another Facebook IPO opportunity right now. There's another angel investor opportunity of ABC company right now. One, do you have the money that you could put just for investing? Goes back to the last point. Set aside so you can not be dependent on your savings, right? You got your savings set aside so you don't need it. That's that money. Do you have the extra money to put into this investment? And two, are you emotionally attached to all these things? Have you done your research? So, it sounds good, but it's not the case, okay? We want to make sure we are diversifying our portfolio. Don't try to put all your eggs in one basket thinking it's going to go to the moon. No. Let's get our indexes, okay? Let's put some in commodities. Let's put some in some artwork. Let's put some in different baskets, right? Some individual stocks too. We could buy some Facebook shares, some Tesla shares, some Amazon shares. We want to diversify, have a well-rounded portfolio. And even in certain sectors, right? Certain industries and sectors too. Again, we can cover all this stuff, man. Cover all this stuff, but we can invest in certain sectors to start getting our money to grow and start weathering storms. Okay, so don't feel like you have to put everything on black, because that's just gambling. That's you might as well go to Vegas and put it all on the roulette table, put it all on black or red and spin it and hope you win. So if that's your investment strategy long term, good luck with that. I don't know how long that would last. And the seventh one, I would say, man, this is a good one too, and a big one I would point out, man, is chasing short-term gains. A lot of people, it really piggybacks off the last point. When they hear, I'm gonna tell you this too, as a trader, right? As a trader who's been trading for years and a profitable trader at that. When you hear of whether you're in stocks, my people who are in futures, whatever you're trading, if you hear something going up constantly, like some news came out, Tesla stock's going up, don't buy it. By then it's too late. You know what I mean? So you want to, well, I ain't gonna tell you what to do. Do what you want to do. You grown. I ain't gonna buy it. What happens is by the time the news gets hold up, it's too late. And the thing is, this is why we trade and invest. Investing, we want it to go up and appreciate over time, right? These are assets. But with trading, I make money whether the market goes up, down, or sideways. I don't care either way. I really don't. Whether we in depression, appreciation, you know what I'm saying? Whatever election, truthfully, I like all this stuff because it gives me more volatility to where I can invest in the market. I don't care what's going to happen. I'm going to catch my moves. Gold going down, cool. I'm making money regardless. Oh no, someone who became president, great. That's good for me that day in the market, or the next day or the next week, right? It does not really matter. And that's the beautiful thing. That's why we want to do both, because this is the way when you learn to trade, you can grow your capital. And when you learn to invest, it appreciates over time. We build a proper portfolio, put it in the proper assets, and we take that money and that income and let it start building wealth for us and our families, man. So hope you got value from this, man. If you like making money, make sure you subscribe to the channel and make sure you stay tuned for more content, man. Till next time, much love.